It is episode number 20 of the Traders Podcast. Super excited, grateful that we have made it to 2-0, coming off of two tremendous podcasts last week. One with Mr. Jeremy Newsom, the second with Mr. Mike Jones. Super appreciative of those gentlemen coming on the show. And today, it's just me. You got me by yourselves. So no guests today, but I am working on guests for future shows. Have contacts out to those people. Very excited about sharing their work with you. So stay tuned for that. But in episode 20 of the Traders Podcast, we're going to talk about the math of being a profitable trader and how you can only win 50% of your trades and still be a profitable trader. A lot of people have this belief that they have to win every trade or 80% of their trades, 90% of their trades, 70% of their trades even. It's not the case. And it's all about managing your trades, managing your investments so that you could be profitable come the end of the month. So that's what we're going to get into today. We're going to have our Ask a Trader segment that will be back today. And don't forget that I am doing Ask a Trader live weekly. This week it's on Thursday, so I have one later today that I'll be recording. So that will be on the YouTube channel. So be sure to check that out. So you can come with any questions, charts you want to look at during that time. Again, that's Ask a Trader. So we'll have the Ask a Trader session here. And we'll also do our little check-in with Mr. ROKU like we've been doing. That's going to be a fun day whenever that stock pops out of the downward move that it's been in, because it's just been struggle bussing. And so we'll take a look at that today. But without any further hesitation, let's go to Ask a Trader. Take it away, Mr. Guitar. All right, Ask a Trader. I got to record a new guitar segment, right? We got to update that. Here are the three questions that we have for Ask a Trader that you shared with me. The first one is the AI being artificial intelligence, boom over? If you think back to the start of this really strong bull market that we've been in, it was NVIDIA that got the show popping back last May. We're in May of 2024 now. If you go back to May of last year, that's when NVIDIA really had that big gap up and things just started gaining traction ground in terms of artificial intelligence. And we saw at the start of this year, everything was popping related to AI. AMD, ARM, Supermicro, NVIDIA, you name it. If you were a chip company, you were banging. MU is another one. But we've seen that slow down slightly. And if you look at earnings season here recently, the chip companies that have reported, we still are waiting for NVIDIA to report here in a few weeks. They've all really haven't met expectations. And it's not because they aren't profitable or they aren't doing well. It's because the bar was set so high back in January and February, whenever they were making their earnings reports, that they almost had to be perfect in terms of what they delivered with their earnings in order for them to gap up or to continue to rise. So these aren't bad companies. No, the AI boom isn't over. We're just seeing a natural pullback, retracement, rest of these AI stocks. They're consolidating. People are accumulating shares. And what you're going to see is these stocks and companies take off again. Now, will it be as crazy and ferocious as it was at the beginning of the year? Probably not. But we're going to see some more action in AI. These are good companies. I still think NVIDIA sees 1,000 before it's all said and done. And I think with their next earnings report, maybe we hear something about stock buybacks. We hear about a split, and that could push that stock even further. So no, the AI boom is not over. And this next question kind of ties into that first one, and it's about this earnings season. And I was asked, why are we seeing not such a great earnings season? We're seeing a lot of gap downs. And I would actually push back on that and say, we are seeing companies who are beating the estimates of Wall Street and of the analysts. They're beating earnings per share, they're beating revenues, but where a lot of companies are maybe struggling is with their forward guidance. But again, You have to think back in January, February, it was crazy. I mean, we were going straight up. So the expectations of analysts, they almost became, I don't want to say unrealistic, but yeah, almost somewhat real unrealistic. And when that happens, if you don't hang the moon like they call it, then you're going to see a negative reaction in terms of the stock price. And we have seen, quite a few gap downs on earnings, but you've seen a lot of companies who've done very well, and you've seen strong gap ups. So I think what happens, and you'll see this, that there's rotations in and out of different sectors. So we were just talking about artificial intelligence and the chips. Well, what happens is you get these stocks that move to all-time highs. You look at AMD, SMCI, Nvidia, who've all done that. What do smart investors and traders do? They take their profits, or they lock in a portion of their profits, and they put it somewhere else in positions of stocks that are beat up. Maybe it is a Roku, or some of these healthcare stocks. So you know, it's cyclical. The market is cyclical. When something's charging higher, there's a stock that is lower in value. It's priced down, and people take their profits and they put them in those companies. And the same thing goes with earnings. Companies that reported poor earnings, they make some changes in their business. They beat earnings per share, their revenue, and they have great forward guidance. That changes. It's not always going to be the same companies doing that. And so that's why we're seeing maybe the names that we've seen in the past who have ran hard, maybe taking a little bit of a breather, and some of these beaten down stocks moving higher. So that's how I characterize this earnings season. But the big one is coming up, Nvidia. I believe that's May 22nd or 23rd. So we'll have to pay attention to that one and how that one's working out. And then the last question is, somebody asked me this the other day: if you weren't trading now, what would you be doing? Well, it's a pretty easy question. I'd still be a high school principal, do my work there in education, a great job, or I would have moved up into a central office position. But I try not to think of that, because I'm very grateful and appreciative of the life that I have now, the time freedom. But that's what I'd be doing. I'd still be in education in some way. So, and shout out to all my teachers out there. Happy Teacher Appreciation Week, all the principals, all the phenomenal work that you guys do. You don't get enough credit. So much love to all the education world out there. Okay. So today I wanted to talk about the math of being a profitable trader, and the misnomer that's out there, that people believe that you have to win all your trades, or that you have to be, 80% winning trades, 90% winning trades. But that's not the case. And in fact, that could be somewhat unrealistic. And you've heard me say several times before that you're not going to win every trade. You're going to have losing trades. It's going to happen. There's just absolutely no way around it. And the truth is you can win win on 50% of your trades. And if you make sure that your losers are small, and you let your winners run, and you lock in that profit, and you manage trades that maybe run in your favor and then reverse on you, if you lock in gains there, you're going to be a profitable trader at the end of the month. And that's what it's all about. A lot of times people think that trading is smashing home runs constantly, hitting $20,000, $30,000 trades every single day. And there may be some traders out there who do it, but the reality is it's a concept that I've talked about before on the show. Shout out to Rob Morrison, where you just want to get your base hits, your singles, right? And you want to just every day, if you can hit a single, right? If you can get on base, if you could snag a small win, and you could do that consistently, or let's say that you strike out occasionally, but at least you're going down swinging, meaning you're protecting your capital. If you're seeing that a trade's running against you, you're mitigating your risk. You're accepting that loss. You're getting out of that trade. Instead of it hitting your full stop loss, you're getting out for a smaller loss. And then over time, just the sheer probability of trading, you're going to have a massive trade. That's how it works. It's all probabilities. If there's anything to take away from today's show, is math. Trading is all probabilities. And so if you keep hitting singles and you have a strikeout here every now and then, or you foul out, or you hit a line drive and the third baseman catches it, you're out. Eventually, you're going to have that home run, or maybe once or twice a year you have that grand slam, right? But we can't get enamored and so hyper focused on hitting the ball out of the park every time. Otherwise, we are just going to continue to strike out, and we are going to have losses that compound and stack on each other. And we're going to think we're terrible. We suck at this. We should never trade again. So that's why it's important to keep that in mind. A trader who wins 50% of the time and maximizes their wins, and who loses small, can be profitable at the end of the month. Let's just do a quick exercise. I got my calculator here. I was going to call it a calendar. But let's say, okay, there's typically on average 21 trading days in a month. Okay. And let's say that you have a risk unit of around $300. And let's just be super conservative. Let's say on average, our winning trades make us about $100. So that's $2,100. And let's say that our trades that we lose on, we have a handful of losers there. We lose about, let's say $20 per trade. So 20 times 21, that's 420. So just using this general math here, $2,100 in profits from your trading over that 21 days, minus your $420 in losses, you're minimizing your losses. That's $1,680 of profit, right? So just to show you some simple numbers, if you could be profitable and still have losses and lose $20 a day for 21 days, you're still going to be profitable, right? And those are just arbitrary numbers. Your risk might be $1,000. Your risk might be $5,000, $10,000. I'm not sure what your risk is. But the more important thing to emphasize here is that if you can maximize your winners, minimize your losers, and do that consistently, get those base hits, you're going to have a profitable month. And let's just take that $1,680, right? And let's take that over the course of a year. That's $20,000, right? Now take that, that 420, and let's do that times 12. So you're losing $5,040. And here's the beautiful thing about it, and this is what people don't understand about trading, is we control all of that. We control what we lose on a trade, okay? And so, again, maximizing your winners, locking in profit, minimizing your losers, that's what leads to profitability. The last thing that I want to talk about here today is actively managing your trades. And this is something where a lot of people, a lot of traders may not agree with this, but I do think it's important that when a trade runs in your favor, that you do things to protect that profit. For instance, I always teach students that I work with that whenever your trade runs into your favor by 50%, you're 50% of the way towards your profit target, that you should lock in some type of a partial win in your brokerage account, whether you're getting out of 20% of your shares, 50% of your shares. And then you take your stop loss and move it into the money. So in the event that the stock does pull back, you're getting stopped out for a small win. This is all about capital management, managing your risk so that you can hold on to that money. Because a lot of times what you'll find, you're in a winning trade, you're feeling good, and then what's it going to do? Boom, reverses. You get stopped out for a full R loss. But a strategy like this, a simple technique of determining that area, hey, when it gets here, I'm going to take a partial and then I'm going to move my stop into the money, that can lock your profit in for those times when the market does reverse. And especially since about mid-March, this market pattern that we're in, we're seeing a lot of that, where you're seeing these strong runs higher and then a reversal, people getting stopped out, or the same thing. You're seeing big drops and then big bounces. It's kind of whipsaw action. So actively managing, taking profits, and moving your stop into the money is another way just to lock in gains. All right. So the takeaways for today: focus on those base hits, right? Accept that you're going to strike out now and then, right? But if you're going to strike out, swinging. Protect yourself, take those small losses, you'll still be profitable. Remember, you can only win 50% of your trades in a month and still be a profitable trader. Okay. And the last thing, make sure you're actively managing the trade, locking in money when it hits a certain area, move your stop into the money, create an unlosable trade. And that's today's topic. And now let's take a look at Mr. ROKU. So let me pull Mr. ROKU up here so we can see what he is doing, if he's still on the struggle bus. And here is Mr. ROKU right now. And we could see that we're hanging out down here at this bottom, right? And let's just go out to monthly chart for a second here. I just want to show, everyone where this stock once was at $492. That was back July 21st. July 1st, 2021, right? Gorgeous double top pattern. This thing just dropped, and it's just been back to where it really started when it came into existence. And you could see that the volume is really low. There's not a lot of action happening here. The earnings, it had an earnings beat, but it still got down because it didn't have great forward guidance. But you see, we're just kind of hanging out down here. But if we go to this daily chart, you could see that we have formed a bit of a new trend line here. It is making higher lows, and we do see that we have a double bottom pattern that's in action right now. Here's our double bottom, right? Here's our neckline. So this area right here is what we're watching. We need a close above that. If we get a close above that, we could get a push higher, and maybe start to move into the mid 60s, which would be progress for ROKU because it struggled so much. But it's got a lot of work to do. I mean, it's not getting it done. And you can see the volume is extremely low, which just indicates it's a stock that people aren't interested in. And that's the big thing with ROKU right now is when you look at their forecasts in terms of their growth, investors just aren't excited about it. There's competition from other big companies like Netflix. Amazon has their Amazon Prime. And there are several other companies where the competition is just so fierce. And so ROKU really needs to have something that makes it stand out from the crowd to be profitable, or it's just going to hang out down here. And, if we go back to, let's see, this past October, it was down to $54. I mean, it definitely can come back down there. There's nothing that's stopping it. And then you could even go back to last May. Where is it? 51. Can it come down there? Yeah, it can. I mean, can it get down here? $38. I mean, it shouldn't. If it does, this stock could be in trouble, but this stock needs a catalyst. I've been saying it. It needs some type of move. It needs some type of announcement where it's acquired a company or a company acquires it. It needs some new type of technology, some new product to get this thing going and to gap it up, because that's what really needs to happen. It needs a strong gap up into where it gapped down before, and it's got to trap some of these bears so that it could squeeze it higher. And we're just not seeing that. And I'll be honest with you, when I look at this chart, I don't see anything promising, optimistic. I did point out this double bottom here, but every time that ROKU shows something, it never materializes. So until it does, we're in the show me state where ROKU, you got to show something, or until then, you're just languishing here at the bottom. So that's a take on ROKU. And then just looking, their next earnings report is going to be July 25th. And I will point out that the last July earnings, which is right here, it was the 27th, you did have a nice big move up. So will that happen this July? Who knows? Got up to 98.53. We'll see. But keep an eye on that. That's Mr. ROKU, and we will revisit him next time we are on the Traders Podcast. And ladies and gentlemen, that's going to do it for episode number 20. My gratitude and appreciation To all of you out there who've been supporting the show since the beginning of this year when I started my new company, Courage Pays Better Than Fear Trading, I appreciate it very much. If you know somebody who wants to learn trading, because I'm assuming all of you have completed one of the boot camps, please have them sign up for the beginner boot camp that I'm going to be running on May 23rd. It's during the day. It's 12 to 4 p.m. So instead of being over the course of the week, we're knocking it out in one day. And I am going to be awarding a $50,000 audition funded account to one lucky winner who participates in the full event. To share that with him, it's in the show notes of this podcast. Thank you so much for watching. Please make sure you subscribe, and I will see you back here next week for episode number 21 of the Traders Podcast, because courage does pay better than fear. Have a great day, everyone.